Welcome to HAC's monthly commentary. Today we're going to take a look at what happened in the markets in January. We're also going to take a look at the major changes that HAC made in its portfolio in January. And we're going to take a look at what we potentially could see in the markets in February. The S&P 500 produced a 2.8% return in the month of January. Now that's after a strong 2023, a strong 2024, and we saw that positive start to the year. We're hoping that continues, but it's always good to see a strong start. One of the major reasons that the S&P 500 performed well in January was investors were expecting Trump to be inaugurated and bring in market-friendly policies. The big question is going to be, is that going to continue or is that priced into the market? Well, we're going to see in the next few months from here. Last month, HAC made some big changes in its portfolio, including entering into a position in the Canadian energy sector. Now, the energy sector tends to start a strong seasonal period in late February, but we saw some increasing strength in the sector ahead of its strong seasonal period. As a result, HAC entered into that position. HAC also took on a position in the Canadian banking sector. As well, HAC entered into a position in the material sector and the retail sector and the consumer discretionary sector. HAC also increased its position in the Canadian stock market and also the industrial sector. Likewise, HAC also increased its position in the gold sector. Now, gold bullion tends to have a strong seasonal period that starts in late December. HAC took on a position in December, and what we saw gold start to really improve its relative performance compared to the S&P 500 in late December, right when its strong seasonal period started. We saw a strong performance for gold in the month of January. HAC also decreased its position in the US stock market, and it decreased its position in the small cap sector. Now, the small cap sector has a strong seasonal period that starts in mid-December. We didn't see that really strong performance from the small cap sector relative to the S&P 500. As a result, HAC reduced its position in the small cap sector. In January, HAC also exited its positions in the NASDAQ 100 and the technology sector. The NASDAQ 100 and the technology sector tend to have a strong seasonal period that lasts from mid-December until late January. Unfortunately, these sectors did not live up to their seasonal trends, and they underperformed. As a result, HAC exited its positions earlier before the strong seasonal period finished. Now, it's a bit concerning that the technology sector underperformed in a period of the year when it tends to outperform. That does not necessarily bode well for the technology sector on a go-forward basis. In fact, the technology sector has been flat to the market, performing at market for over a year and a half. It would be good for us to see the technology sector to move higher and outperform the S&P 500 to show a strong bull run. But that hasn't happened, and it is a little bit concerning at this point. What should we expect from the markets in the month of February? Well, on a seasonal basis, February tends to be one of the weaker months of the year for the S&P 500. When we look at the S&P 500 from 1950 to 2024, it tends to be one of the weaker months on an average basis. The big concern in the markets right now are the tariffs being proposed by the US and the retaliatory tariffs from other countries. We don't know exactly how this is going to end up. It's very fluid. There's different types of tariffs being paused and added, and this adds uncertainty. Investors don't like uncertainty, and it tends to put a damper on the markets. That's a big concern for the markets at this time. We're also at close to an all-time high for the S&P 500. Now, the S&P 500 can move higher, but we might see a little bit of a pause here as the market digests some of its gains. Don't forget, we did see the strong 2023, strong 2024, and a strong start to the year. So we might digest a little bit of these gains at this point. If we put it all together, February tends to be a weaker seasonal month of the year in that positive 6-month period for the markets. We have some uncertainty as far as policy goes, and we're at close to all-time highs for the S&P 500 on a stretched market at this point. We still are in that strong 6-month period, and we could still see the market still perform well over the next few months, but February could be a little bit of a concern at this point. Thank you for joining me today. I'd love to know your comments on the markets in the month of February. Don't forget to subscribe, and we'll see you next month.